All right. My name is Chris Igoe. Right now, we've got forced sales, panic selling, liquidity crisis, margin calls, currency devaluations, default risk, systemic risk, and Wall Street getting eviscerated. But please understand, I'm absolutely going to tie all of that directly into the housing market because everything is interconnected. But it would be totally irresponsible of me to start there without giving the more complete picture first. If you're new to the channel, then welcome aboard. If you are a returning viewer, I appreciate your participation in our journey, and I remain committed to sharing the best information so that you can go out there and make the best decisions for yourself, for your family, and for your financial bottom line. This past week, I was out in California attending VidSummit when Hurricane Ian was threatening Florida. And I got a phone call from my daughters. There's a 3-hour time delay between the West and the East Coast. So when my kids called, it was about 8 o'clock their time. And I can typically predict that they're going to call me every night around that time. But what I couldn't predict was the terror and the fear that they were experiencing in real time because they believed they were in imminent danger of being hit by a tornado. And in my mind, I'm thinking they've got to be using the wrong word. They really mean hurricane. But they were emphatic. They meant tornado. And I made the classic mistake that I see many people making right now in every market. And that mistake is they think because they haven't seen something before, that the thing that they haven't seen before can't possibly happen because they never experienced it. But full disclosure, that's exactly what I did. And I was really happy that they called. Now, I'm not one to react emotionally to most things, and I very rarely panic about anything. But when my kids are terrified, I absolutely want to comfort them and support them in their time of need, which is exactly what I did. I absolutely thought it was impossible that they could be potentially threatened by a tornado, given my experience. And I was dead wrong. So I think by now everyone knows that Hurricane Ian has gone up the coast and destroyed a lot of Florida. But in real time, as I was tracking the storm, I thought the odds of us being negatively impacted by any of that pattern were very low. That was based solely on my 40 plus years of living in South Florida and having experienced and weathered many hurricanes. And to be very clear, I understand the devastating power and force of a hurricane. So I don't want to minimize that at all, but I also know that we are prepared. So in my mind, there was zero risk, and I was wrong. And my kids were right. And while we got lucky and we were not part of that tornado's path, there were quite a few communities that are very close to where we live that were totally devastated. The 55 plus community of Kings Point, I've helped people buy and sell in the past, was devastated. And there are a lot of people right now that are homeless because their condos were destroyed by these tornadoes. And then separate to that, there are a ton of people in Northwest Florida that have been totally devastated. So I've donated some money, and I would ask you to do the same if it's right for you, to serve and support these families, these people who have been completely wiped out. And I'll include the link below and in the comment section if you'd like to make a donation. And believe me when I tell you, whoever's been impacted by this hurricane is in desperate need. I am very concerned about the ability of the insurance companies who have a financial obligation to pay the claims on damage. And one of the recent estimates that I saw was something in the neighborhood of $50 billion in damage. Unfortunately, here's the dirty little secret, which isn't really a little secret. In fact, I recently did a video exposing the home insurance risk that exists in Florida, which I'll link in the top, but honestly, don't waste your time because anything that you see is yesterday's news. And I'll summarize it here for you right now. The insurers do not have the capital reserves to pay out on these claims without going bankrupt or without going to the state and assessing every homeowner in order to pay out on those funds. And please keep in mind, hurricane season is not over. In fact, it intensifies and typically gets worse towards the end of this season, which, if memory serves me correctly, is the beginning of November. So while the balance sheets of these insurance companies may be still intact enough to pay out on these claims, I don't know that to be true. And I suspect if we get hit with another or a series of other hurricanes, the state of Florida has a big problem. So I would ask you to please, if you can, make a donation to those that are affected, and I'll do the same because I believe we are all committed to doing the right thing and helping as many people as we can. Once again, that link will be in the description and the comment section down below. I've talked a lot in the past about how real estate is a lagging indicator, and it is. So any housing market data that you see is not particularly instructive because all of that information is old, and the prices and the values that are associated with it are the last to be impacted by economic and market conditions right now. I read all of your comments, and a lot of you believe that you watch the market and you're aware of what's happening in your local market, and that your local market has not been negatively impacted or hasn't changed. And in every single response that I do, because I respond to every comment that comes in, I share what the shifting dynamics are. And in every single instance, they have changed radically. And full disclosure, prices have not decreased in most markets yet. To be totally clear, I'm not referencing listing prices. Listing prices have been getting slashed on the regular. But so far, real home values, specifically in my market, are still appreciating. And I suspect most markets within Florida are similar. But the trend is not our friend. And I'm only sharing this because I just made this same mistake. I thought because I never experienced a tornado, it was impossible that there could be one. And I suspect there are many homeowners right now that think the same thing about the housing market, which is why it is imperative to me that I share the entire macro picture, connect the dots across many different markets and economies globally, so that we can make the best decisions for ourselves, for our family, and for our financial bottom line. So as a boots on the ground operator of a high performance real estate team in South Florida, I know what the market conditions are. But as a former stockbroker of almost 20 years, I've got a lot of experience navigating uncertain, fearful, and volatile markets. The truth is, I made a fortune for myself and clients in the financial crisis. Moving forward, I intend to share some of those strategies that I've used in the past to profit the most. And to be clear, none of this is financial advice. I'm no longer a Series 7 stockbroker. I no longer have my life, health, and variable annuity licenses. I'm a full-time real estate professional. I intend to share exactly what I'm doing in real time to profit for myself in these market conditions, so that you can see exactly what I do and you can determine whether that's the right move for you. Now, to be clear, the housing market dynamics that exist right now in my local market are trending to a buyer's market. In many places that I serve and support, they are still more favorable to a seller. But the market's changing fast, and none of what I'm seeing in the housing market is particularly instructive, given all of the massive changes that are happening in every other market. But let's start at the stock market, because the stock market prices in future events in real time. I've had plenty of phone calls from real estate clients in a total panic asking me questions about their IRA, their 401k, or their stock accounts. And they are terrified. They do not feel wealthy. These are very successful people who have had a lot of money in the markets, which made them feel wealthy. And they've been decimated over the last few years. And psychologically, they no longer feel wealthy. They're terrified. They feel like they're at risk. And they are. And so is anybody else who is not prepared for the reality of what's coming. To be clear, I'm not here to scare you. I'm here to prepare you so that you can make moves to profit when the fundamental conditions are right. That is not today. So the Dow tumbled 500 points on Friday to end September down 9%. And Bank of America's strategists, which might be a new way of saying analysts, who, by the way, in my experience, are almost always wrong. However, in this particular instance, I think they're right. But they see Wall Street rout forcing asset sales. That spiraling losses on Wall Street are now snowballing into forced asset liquidations. And they're right. It goes on to say that the New York Stock Exchange Composite Index, which includes U.S. stocks, depository receipts, and real estate investment trusts, has broken multiple technical support levels, including 200-week moving average, the 14,000 mark, as well as 2018 and 2019 highs, and that the accumulated losses could be forcing. Let me be clear and edit the language from could be into is. Accumulated losses is forcing funds to sell more assets in order to raise cash, which is accelerating the sell-off. And this same analyst goes on to say that he will have a bearish view of the market until panic selling forces a central bank intervention. And then he goes on to say that markets stop panicking when central banks start panicking. Central bankers and policymakers have a proven track record of lying to us. Ben Bernanke and Tim Geithner had a responsibility. Their job function was to ensure that the markets did not panic. So if this is the best analytical strategy that Bank of America has, they're in real trouble. Now, I'm not an analyst, I'm not an economist, I'm not a strategist, I'm no longer a financial advisor, but I can tell you with certainty that anybody following technical analysis in this market is going to be eviscerated because all technicals are off the table when there is a fundamental crisis or a systemic crisis or a global crisis. And we're dealing with that three-headed monster right here, right now. It would be totally irresponsible of me, knowing everything I know over my 20-year career as a stockbroker, profiting in the worst markets, to not share exactly what's going on across the world in every market so that you can make the best decisions for yourself, for your family, and for your financial bottom line, no matter what the market conditions are. And China is getting aggressive and it's making its move right now. And going back to my tornado analogy, almost everyone alive today has only experienced the US dollar being the world's reserve currency, but it hasn't always been that way. And China would love to be in a position where they're the reserve currency. And back in the day when the dollar was tied to gold, there were advantages and disadvantages. But since then, the United States economy has gone on a predictable pattern and ride. And going back in time and studying the history of the rise and fall of other governments and economies shows a predictable pattern of outcome. And everything that has been done economically, governmentally, and from a lending perspective put us at massive risk. And China has told state banks to prepare for a massive dollar dump and yuan buying spree as Beijing's prior interventions have failed to stem its currency's worst year since 1994. And that hawkish Fed moves have pushed the dollar to a 20-year high, pressuring currencies from around the world. Now, I mentioned previously that the dollar is no longer tied to gold. Our economy has benefited greatly from that move. However, since then, Russia and China have hoarded 90% of the gold that exists in the world. Physical gold. Now, it's possible that I overestimated by a little bit, but I'm very close. That doesn't mean I'm not friends with people who are from Russia and China. But anyone out there who does not believe that Russia and China would love to destroy our economy is on the pipe. Be 100% transparent and clear. By no means do I think that I am the end-all be-all expert or authority on everything that there is to know about anything. And I would absolutely encourage you to empower yourself with information from other places. The more you know, the more you grow. I think that might have been a Saturday morning TV commercial. But it's the truth. So go out there and check some other channels out too, because there are many people that are committed to the same mission that I am. Check out my friend Kevin's channel. Check out the Economic Ninja. Check out the Real Estate Ninja. Check out Meet Kevin. And despite the things I've said in the past about taking real data and misapplying it, check out Reventure Consulting and do your own research. Check out Christina Smallhorn. Check out Jeb Smith. Check out Clear Value Tax and do whatever you must to educate and empower yourself to profit irrespective of any market condition. Now I'm going to pivot back to my housing market. People who are thinking about buying or selling right now in today's market. If you're thinking about selling, the first thing I would ask you to do, get total clarity as to why you're thinking about selling. Do you think that you are at risk for any of these economic changes? Run the numbers and see where you're at. And if selling's right for you, then right now is the time. And I'm not saying that for my benefit, although full disclosure, I will benefit. I'm saying it for your benefit because once the pain of all these other factors is truly felt by homeowners, you will not get the same number that you will get today. And we specialize in finding the one buyer on planet Earth willing to pay more than anyone else, irrespective of market conditions. And if you're thinking about buying right now in this market because it's right for you, understand that the market dynamics have shifted enough to enable you to be able to negotiate a much better interest rate than what's advertised right now. And I'll translate that for you. You don't have to pay 7% if you can negotiate with the seller to significantly buy down your rate. And if you're working with the right professional who knows how to be creative, you can turn your 7% and your monthly payment into something significantly less. And I promise I'll do a video as to exactly what that looks like very soon. Now, I hope you found this content valuable. And if you did, please subscribe to the channel, share it with a friend, give it a thumbs up. If you've got any questions or concerns, then please leave them in the comments below, and I promise I will answer everyone. I also noticed that many of you are not in my local market, which is fine because I'm committed to serving and supporting you at the highest level, no matter where you are. So whether you're thinking about buying, selling, investing, or need help with a mortgage, we can connect you with the best of the best in that space, no matter where you're at. Someone that we know, like, and trust that has a proven track record to ensure that you get what you want, irrespective of market conditions. So if you are interested in a referral, then please click that link below, and it will also be in the comments section. And we'll get you connected right away. Now, I recognize many of you are new to the channel and probably have not watched most of the content that I've done related to the housing market. So if you would, check out those videos, which will be up here, because I know you're going to love it a lot. And keep your eyes peeled for my next video because it's coming soon. And until next time, peace!